Hello, everyone. Welcome back to Navellier Market Buzz, episode 13. I'm Crystal Navellier, and I'm joined again this week with my father, Louis Navellier. Dad, happy birthday.
Well, thank you.
November's popping, the stocks are popping. I noticed that last week my account was up sharply. What's going on?
Well, the market was, for lack of a better word, reliquefied. It certainly helped that Nvidia announced better than expected sales, earnings, and guided higher. Nvidia is the market leader, and earnings season is largely over with Nvidia being the grand finale. But we will have Costco and a couple other stocks announced in the next week or so. It's shocking how much the stocks went up, to be candid with you, this last week. We had Sezzle, which, went up 174% one week, went up another 20% last week. We had SMCI surged over 78%. Of course, they did file to with NASDAQ to make sure they don't get delisted. They hired a new auditor. Supermicro has stunning sales. And what's interesting out there is some of these short sellers are attacking companies on sales. Lilly is the latest. So Lilly's a good buy here on a pullback. And I think these short sellers attacking companies on sales is pretty stupid because, these companies just book the sales and they put them in their order backlog, and that's that. And but we're relieved that obviously SMCI has resurged, and we expect it to continue going higher. Now, there were some other interesting stocks this week I should mention, since we've mentioned them in previous episodes. MPTI, stunning, absolutely stunning. PAY, despite announcing in previous week, it didn't back and fill, it just kept going higher. GigaCloud, same thing. UTI, which is Universal Technical Institute, did announce, and their results were much better than expected. UTI is the trade school to train all the auto mechanics and diesel mechanics. So if you ever go to your car dealer nowadays, you notice they have to fix your car with a laptop, and so the UTI training is very important. SPX Technology is another one that they announced a few weeks ago. They're still running. So there's been a lot of institutional accumulation in our stocks, and this week, in all candor, was even better than the Trump bump week. Where the market surged after Trump. So we're static. There's clearly a January effect underway. The traditional January effect pattern is we rally into Thanksgiving, and then we might consolidate just a bit more. And then the real January effect commence is in January. So we're going to have a very, very strong start to the new year. Also, we're getting updates on Trump's economic appointments. Howard Lutnick becoming Commerce Secretary. That's going to be phenomenal. Howard's going to be running all over the world, telling everybody, hey, you better make sure your tariffs aren't higher than ours. Otherwise, we're going to raise them to your level, but you're going to have to cut to ours. And he's going to just be great for commerce and probably tax revenue as well, because a lot of countries aren't going to change their tariff policy. So we will get more tariff revenue.
While we're still on the topic of stocks, one of our subscribers had a question about ERJ, whether or not they should still hold it.
Yeah, it's in my portfolios. That's the Brazilian jet maker. They make the regional jets. They've got some great orders underway. We also have a company called SkyWest, which flies those regional jets all over the Mountain West. We've had an early start to ski season. They had one of those atmospheric rivers from quote unquote a bomb cyclone hit. So if you need if you want to start your ski season early, we got plenty of snow.
Now let's switch over to Nvidia. Were you happy with their earnings announcements last week?
Yeah, ecstatic. Again, I briefly mentioned it, but sales were up well over 90%. Earnings were up a lot more from margin expansion. Operating earnings were phenomenal. It was over 6% sales surprise, over a 9.5% earnings surprise. And then what they did is they raised their sales estimates for this quarter. The thing that's the most amazing thing about Nvidia is they've been selling their old chips. And now going forward, they're going to be selling the Blackwell chips. There's been a lot of interesting press on Blackwell, that they run hot and they're hard to manufacture, but they're coming. They're on their way, and everybody wants them. And Nvidia is the market leader. It's the biggest capitalization company in the United States. It's a phenomenal stock. Now I know a lot of people talk about the Magnificent Seven. I would rather when they refer to the S&P 500 and its dominance, that they refer to Nvidia and 499 other stocks. So it's great. I had an article in Market Watch about this stock, how I want to hold it to the end of the decade. The reason is Nvidia is going to keep introducing new chips every 2 years or so. They spend over $2 billion. No one can compete with them on regenerative AI. Regenerative AI is machine learning. And I would encourage everybody to go to YouTube and watch Jensen, the founder of NVIDIA, give a talk at Stanford Business School. Actually, your brother was in the audience for that talk. And it gives a very clear picture of how NVIDIA will dominate through the end of the decade. What will happen at the end of the decade, it's going to be harder to make the chips faster because you're really approaching the atomic level because the transistors are so small and you can't make them smaller. You can't split out atoms to make a smaller transistors. So they'll be hitting a physical limit, and they're going to have to do quantum computing to speed things up faster. But they're already working on that with Google on building the foundations of quantum computing. They're called qubits, the way they process the data. And then they also have a quantum cloud simulator on the internet. So NVIDIA this is a stock that changes your life. It's up to 18% of some of my portfolios. I have not trimmed it. I don't want to trim it because I don't want to pay the taxes, and it's going to continue to be an incredible performer through the end of the decade. And that's kind of what I wrote about in Market Watch.
Let's switch over to the chicken world. I heard that you have a new chicken stock. What is it?
Well, we have Pilgrim's Pride in the portfolios. Those are broiler chickens, or the chickens that people eat. I know Thanksgiving's coming, but in America, we can make a chicken bigger than anybody else. But that's Pilgrim's Pride, and they're in some of our more aggressive portfolios. We have a new egg layer we're announcing for our newsletters, and because people will be buying it on Monday, I probably should mention it here, but it's the biggest egg layer out there, and it's based in Mississippi. And we can talk about that next week. Then, of course, we have our organic egg layer of Vital Farms that we've been talking about in recent weeks. So those are the organic chickens that run around. Most of the chicken facilities just cram their chickens in a building. They don't move. They just sit there and eat. That's how they live. So this egg layer we're recommending, which is the biggest out there, doesn't let their chickens run around too much.
Now, the conference board will be announcing its consumer confidence index on Tuesday. What do you expect from it?
Should be great. Consumer confidence is way up. The only weak link is the job market. The job market has been a little soft, but we have new administration coming in. We got a lot of economic incentives that will be out there, so it should be picking up quite a bit. But the conference board report is the best report. From what I can see, we're off to a very, very strong start this holiday shopping season. The Black Friday specials started over a week ago. So it's not just Black Friday now. It's the 2 weeks headed into the Friday after Thanksgiving. So I expect that the Black Friday sales to be phenomenal.
Now, for durable goods, that's going to be announced on Wednesday. What do you expect from that?
That should be better because the Boeing strike is resolved, okay, and Boeing has been hurting. Also, the automotive industry perked up when we looked at um, the recent retail sales. So autos were up sharply. So I'm pretty optimistic between Boeing and the auto industry. Durable goods should be turning up. Now, whether they'll be turning up to an expansion mode is the real key. This is really what Trump wants to do. We've had a manufacturing recession for over 2 years in America, and the manufacturing states, for lack of a better word, picked the president, and it's now Trump's job to make sure they resume their growth. And not only does that have to get them going here in America, he has to get their exports growing again. That's part of the tariff battle that we're about to have with some other countries.
So, Thanksgiving is obviously a very happy holiday. Does the stock market also like to rally into the holiday?
Yeah. Thanksgiving's a happy time of year, friends, family, football, food, all those things. So when people are happy, investors are happy. Also, we start to get some new pension funding late in the year. And So there's just positive money flows. So if you look at the money supply, especially money supply, the cash at banks plus CDs under a year, it's surging, and the market is highly correlated to that. And so money's pouring in. A lot of the what's going on with the money slosh around America, it's foreign money because our rates are higher. Our dollar is very strong. In fact, it hit the strongest level since 2022, and the euro is precariously close to breaking a dollar. And so when that happens, trust me, foreign money will continue to pour into America.
So one of my favorite holidays is Black Friday. Can you explain to me why the stock market is only open half a day?
No, I really can't. I would close it. Not only is it very thin trading the Friday after Thanksgiving, sometimes some unscrupulous people come out and try to manipulate stocks. I think the probably the most egregious thing I ever saw was it was at least for probably 5 years ago, QuantumScape, which is trying to make solid state batteries for Volkswagen and other vendors. Um, had a positive announcement the Friday after Thanksgiving, and the stock shot up. It's there's very thin market conditions out there, and so you, if you make a positive announcement on the Friday after Thanksgiving, your stock will shoot up. You make a negative announcement, stock will shoot down. So it's just a day I'd rather they shut the market down entirely.
Well, it's interesting because Black Friday really isn't a thing anymore. The sales are already starting.
Yeah, yeah, and everybody's offering their specials, and you know, um, you know, it works for even me, and I'm not a consumer, but I bought your mom that new portable speaker because they discounted it and it was a lot cheaper direct than on Amazon. And companies are going more and more to direct sales models.
Could you elaborate on why the euro is so weak and the dollar is so strong?
Yeah, that's a big development. We had S&P Global announce the preliminary PMI for France, and it collapsed, and it was weak the month before. So France is the second biggest economy in Europe, and it looks like they've just slipped into a recession. Germany, which is a huge manufacturing economy, their PMI has been weak for 9 straight months, and they are definitely in a recession. And Germany's biggest problem is they went green, and there's nothing wrong with going green, except it makes your electricity more expensive, and they're a manufacturing economy. So now they got to outsource their manufacturing to Poland, Hungary, Slovakia, Czech Republic, etc. And it didn't work. So their ruling coalition fell apart. They're having elections in February. Looks like the guy that leads the Christian Democratic Party, Mr. Merz, will become the new chancellor. And what I expect is that Germany's probably going to start to sell some debt. They have very low debt per GDP and per capita, but they have these huge ambitious projects for green energy, for infrastructure, and so I suspect he'll come in and he'll start to stimulate the economy with those big projects, and they'll start to incur some debt. But what's happening is the European Central Bank is freaking out because you've got the number one economy in a recession. Now you got the number two economy, France, that just slipped into an abrupt recession. So the whole Eurozone is contracting, okay? And so they're going to have quite a few rate cuts, okay? And as global rates come down, it's going to make our rates come down, which is great for America. One thing I can tell you is Trump definitely wants lower rates, and he can't help himself. He's a real estate guy, and rates are just too high for him. So that's wonderful news, and for both Europe and America. The last comment I'd have is obviously Europe's a little on pins and needles because Joe Biden did give Ukraine permission to launch longer range missiles into Russia up to 139 miles. And Russia responded by launching these huge ballistic missiles. The U.S. had to evacuate its embassy in Kiev. on fear of a missile attack. So there is an escalation, and also Joe Biden approved landmines. That the UN doesn't like landmines, and but they're now approved to maybe slow a Russian advance. Now, winter's going to be coming. Usually that slows the fighting down, and what a mess. And Europe wants this war over. In fact, if you survey the Ukrainians, they want the war over. It's hard to live life when missiles are flying all over the place. And I realize there's a missile shield over Ukraine, but there's still missiles to get through, especially the hypersonic missiles that Russia likes to show off. So they're on edge. So they need to, they're in a recession. They need this to end. They need to stimulate their economies. And one last thing that everybody needs to understand, Europe is old. Okay. They don't have household formation. That's why they don't have real estate inflation over there. In fact, if you want a cheap house, you can move to Italy and buy a house for $1. Of course, you have to maintain it. And it's going to be in an area of Italy that's not thriving. But it's hard to grow your economy when it's aging. It's as simple as that. So people your age stimulate the economy a lot more than people my age, and the younger society, the more prosperous it is. So Europe just has to, get its house in order, for lack of a better word. And there's going to be lots of rate cuts from the ECB. Now, the ECB is very hostile to the U.S. tariffs, but Howard Lutnick will explain that as long as you take advantage of us, we're going to have to raise our tariffs on you. So hopefully Europe will become more of a free trading place and lower their tariffs to the U.S. levels.
Well, thank you so much for answering all my questions this week, and thank you to you all for liking and subscribing. Once again, if you have any questions, please leave them in the comments below. But until then, we'll see you next week. Happy Thanksgiving.
Yep. Happy Thanksgiving, everybody.